So hi guys, we're back with another video of the post-market analysis of NASDAQ and gold futures. Again, this is for May 15th and let's get right into it. So as you all know by now, I mark out my previous day high, my previous day low, right? And after that, I just look for context in the market. My context today was that the market was trending, oh, sorry, the market was trending bearish in a wide channel. Why do I call this a wide channel? Though you should know it by now, because both sellers and buyers are making money in this. Here, the buyers made money, sellers also made money. Sellers made money, buyers also made money. So, since both of them are making money, this is a wide channel. Now, I watched the market from 7 a.m. EST, which is right here. When I came into the market was actually right at the top of the channel line and it was trending bearish. Now I could have taken one trade here for a move bearish, but since I just came into the market and I was expecting some further movement, either it to go up like that and didn't. So I just kept on watching, looking for better setups on the day. Now I obviously, like every day, I start marking out my levels, my channel, my breakout modes, and early on in the day I could see this channel forming. This channel was a way for the bears to take control of the market again after this bullish move, and the prices started moving bearish. After the bearish move, price clearly gave us a breakout mode. So this was the breakout mode. This was the breakout mode of the market. Pullback. Now, I've told you this a couple of times, but I'm going to say it again. The breakouts below channels most likely fail, right? Until it has swept above and moving bearish, most breakouts are going to fail. So I was expecting probably this breakout to fail at some point. Also, I was watching the market near the lows, these lows, because I could understand that if the breakout was not going to fail, I was probably going to get a strong close below this and the market would continue to move near channel lows, right? Since it did not move actually low enough here, so I was watching the market, looking at possible opportunities, and then there were three signs here for me to look for. Okay, so the first one was obviously this failed, this channel breakout, right? Pullback, continuation. So I was watching this. The second thing I was watching, that the price couldn't really close below these lows. It was just wicking up and down, though there was a bodily close, but not good enough, not a strong bear bar. Then I could see this very small channel forming. This was another channel, right? And prices were actually supposed to go to these lows. Prices should have went to these lows, but prices did not go to these lows and essentially stopped below it. That means buyers were present in this area just below previous lows. So I was watching out for that. Then market gave me a breakout above this channel, which gives me a two leg reversal up. So first leg, second leg, reversal up. So I wanted to buy here essentially for the same reason as I explained to you. It was a channel moving bearish, wide enough channel for me to make money both on bulls and bears side. Price could not close below the lows of previous lows, right? Strong closes. Channel couldn't be completed, like it couldn't, the price couldn't move to channel lows. So I was looking to long. I entered my first long right here on the close of this bar. I can't mark it out properly here, but yeah, my SL was below this, right? This wick bar, it was below that. I could have kept it here for a tighter risk to reward and win, but I kept it around here because I was still looking for just a 1 to 2. Now, as soon as price moved to the 1 to 2, it was actually the 925 bar, and I've mostly experienced that near the open prices do wick around here and there a lot before actually picking up a direction. So I exited the trade quickly. I exited it right at the break of, like, right here, because it was just near the channel line and the 25 bar still hadn't closed. So I was watching that and I closed my first trade there. Then this was the 930, it was the open candle. First bear bar, second bear bar. Now, two strong bear bars right at the open most likely suggest that the price could further move bearish, but couldn't move bearish. The next bar was a huge, it was a doji candle. Third bar after that, prices moved down and moved up. This was actually a good enough signal for me to long the market again. I was expecting a major trend reversal. The reasons were still the same that applied here. This all price action, obviously this matters because you have to trade again at this point, but for the same reasons this was considered to be a lower low major trend reversal. Price couldn't move inside the channel. It was already a wide channel. That means the price was already overextended enough for it to make a pullback, right? Thinking about that, I knew that it could definitely have a reversal day. Again, comes down, moves up, comes down again, strong bull bar. My entry is right here. I enter my trade right here on this bar, the close of this bar, SL just below this. This is the last point of support for buyers, because if the prices move below this, then it likely means that the sellers are totally in control. Now, whenever you're looking for a major trend reversal, mostly it happens just like that, but there are always two possibilities on a major trend reversal. Now, why do I say that? I say that because when a trend is already there, most chances are that the trend will continue for a longer period of time. Market has inertia. It is supposed to continue to do what it has already been doing, right? So I was expecting possibly a trading range as well from this level. I was expecting this to also, like, there was a possibility that this could become the new trading range and the market would just continue to go up and down in this range. That was my second scenario for the day. But after this bull bar, I saw a small, my entry was right here, small bull bar, continuation in the form of a bull bar, went to the channel highs, and then you see the strong bear bar. What a big bear bar, right? Everybody in their minds who would be long, they would be selling after this bear bar, and it actually encouraged more sellers because the low of the bar was broken. So anyone who entered on a stop order below this point was actually stopped out pretty quickly. But since I already had what I had to do in the mind for the day, after this bear bar and this strong bull bar, I actually averaged out my trade to somewhere around here. My trade was around here, right? And I was looking for a 1 to 2 or 1 to 3, and my first target was this high. There is a reason that my target was actually this high. The reason is that the first channel, sorry, the first range I'm talking about, the first channel that formed, its high was right here. So I would essentially expect the market to at least move to this level. Even after that, it could possibly range. Strong possibilities that it would form a range, but I just had my SL till here. After that, I moved my actual entry like SL to here because I knew this was my final trade, and I made a 2.79. I actually made a 1 to 3 if I'm not wrong. Yeah. I made a 1 to 3 on this trade. I was with 3 contracts, and again, not a really big risk, right? So I made a 1 to 3 on this trade. I exited the trade, and then again, I was still watching the market till then. And after that, market started ranging actually. The market started ranging between this level. Now, there is a reason for everything that the market does, right? There is a strong enough reason. If the market is ranging, if the market is trending, that means one of the buyers or sellers are in control of the market. So market ranging here meant the sellers don't really have a lot of, a lot of power in them left. If you look at any of these bars, strong bear bar, continuation, bear bar, continuation, no continuation, bear bar, bull bar, bear bar, doji, bull bar, bear bar, bull bar. Again, this three bear bar was actually the first time the sellers actually tried to take control of the market. And then also, since I was already thinking about this range, I could see that there is potential for buyers to continue. Now if you leave this and you this rid of this, you have to think in terms of binary possibilities, right? So this became the breakout mode, right? What happens after the breakout mode is typically a channel, right? A channel trending upward. But here actually it happened to be the opposite. It formed a very clear bull flag. This was the bull flag. You should know that by now that all bull flags actually do the same thing, like they result in continuation. So again, here this is bull flag and final continuation, almost equating the price that it moved further. Right now, I was watching the market since here, three strong bear bars, no follow through after the breakout of this trading range. So I was looking for continuation for the bullish, because I could already see that this is a major trend reversal and the majority of the trend has been bullish in MNQ. That's what I was watching for. Now again, first leg, second leg, continuation. I actually had my entry right on the top of this bar, and again SL below here. Now you have to understand this very correctly, right? The way you place your SL is actually going to differentiate between your positive and negative trades. If I would have placed my SL right here, if I would have kept a tight SL, entered with a larger size, I would be stopped out. Even though my trade thesis was absolutely right, but I would still be stopped out. That's what you have to think about again and again in the market. Your placement is what differs a winning trade and a losing trade. That's why you also have to keep the SL at a good enough point. Maybe if you see the trade working out, you add on to the trade. There's no problem with that. No problem with adding on to the trade. But there is something, you know, it is really wrong when people say, okay, you know what, I'm going to enter with bigger size, keep a tight SL. If you're a scalper, makes sense. But if you're going to swing trade on the 5 minute chart, that is the absolute wrong, like wrong kind of thing to think about, right? Strong bull bar. After that, I moved my SL here. Now my SL is really small, right? Now I know that I will not lose. I entered with actually 4 contracts this trade because I already had profits running from here. So like I had a lot of profits on the day. So I entered with 4 contracts, and if you look at it, my loss was actually $400 here. Here, if you look at it, what is it? That's like $640. But I didn't worry about it because I knew that the price was moving in my direction. And by the time I moved my SL here at about $400, I knew that even if I get a 1 to 2, 1 to 3 trade, I'm making good enough money on the day. And that's exactly what happened. Broke out, and I was looking to target this previous day low because I knew that after that anything could happen in the market. Though I don't really trade after 12 o'clock, right? 12 o'clock is my hard stop for the day. But today, since I had such a good trade going on, I already had a positive day with 2 great trades. I wanted to risk it a little bit here to make it an exceptional day, which essentially did end up happening. And that's what happened. I traded my trade here, I exited right here. And that was the post market analysis for today. And even after that, if you look at it, same analogy, nothing changes, right? You have to look at it. Channel, this is a channel, breakout pullback channel, and this is also a wide channel. That means buyers made money, and if you sold at the top, the sellers also made a little bit of money, though it was only scalping, but they still made money. Again, 1 leg, 2 leg, 3 leg, moves up, goes to the previous high. Now there are further chances that it went up right here because I already showed you it was in a wide channel, trending bearish, right? So it could go up right here, but after this channel, after this point, I actually exited the trade because I didn't want to trade any further. And after that, what happens is the channel broke bearish. Now, till what point can this price go? You can just think about it like on an everyday basis. That's what you have to do on an everyday basis to make money. You have to think about it. The price can go till here, this range, this area. Price can go till here, here, and then move bullish as well. So you never know the exact point where price is going to start actually moving. You just need to take calculated bets, calculated risks on probabilities of what can happen. Obviously, people say that you've had 2 good trades and now you should just stop trading for the day. I think that's the exact wrong analogy to have. I think when you have had profitable days, you should push it further to make it an exceptional day. Because one trade actually has nothing to do with the other. Like if you take one trade and you lose it, the next trade you're going to take is going to be an absolutely different setup. So it doesn't matter how you do it. That's what you need to think about. So, and always divide your decisions into binary decision loops. Small is a trend, trading range, major trend reversal. What are you trading? You should know it by heart, the exact setup you're trading. Okay, guys, that is it for the day. See you in the next video and follow me for more content like this. Take care.